Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Vadilal is the stock on our radar. The company has reported a muted set of a revenue growth. The revenues, in fact, have declined by 3.5%, but the gross margins have expanded. Rajesh Gandhi, the CMD of the company, joins us on the phone line. Rajesh, afternoon. Now, Q1 is typically a seasonally strong quarter for Vadilal Industries. So if you could help us understand what happened at the top line. In Q1 of FY18, that's last year, you had recorded a revenue growth of nearly 20%. This year, you've recorded a revenue decline of 3.5%. So what went wrong?
You see, because of the GST introduction last year, there were some happened from Vadilal Industries to Vadilal Enterprise, the marketing arm, and that was the reason. So in real sense, the sales has not declined. It has grown by more than 10%.
Okay, so you're telling us on a like-to-like basis, it's grown by 10%. So
yeah, that's true.
Okay, all right. So we'll take that point then. So let's talk about the revenue itself. Break it up for us. How much of it came in from your ice cream segment, and how much of it came in from processed food, and what was the growth in both these two segments?
The revenue from the processed food is around 10% from processed food and 90% from the ice cream and dairy products.
Okay, and the processed food, what was the growth out there? If you could split that up for us. You're seeing 10% growth overall. So for both these individual segments?
The processed food also more or less same growth.
Okay.
There's a slightly higher growth in exports by around 25%. And the exports growth.
All right. Let's come to the margin front. A sharp expansion in your gross margins. If you could tell us the key reason for that. What was the procurement price for milk? Was that the key reason? And can you sustain gross margins at these levels?
Apparently, there are 2-3 factors for the gross margin. One is a product metrics change. That is one subject. The second is a raw material price revision, and the third is a improvement in the overall performance of the organization. So these are the 3 factors whereby the margin has increased, and we believe that as the same vigor and same things will continue, and so we would see the same margins. Of course, there will be a seasonality which will affect, but more or less that will continue.
Okay, interesting. If you could help us out with what's the debt in your books. I'm just looking at it. Your finance cost has been reducing. Even last year, there was some reduction. So are you repaying debt? What is the current debt in your books? Last year, I think you paid 15 crores as a finance cost.
Yeah, the debt is reducing because of the improved profits.
So what is the debt in your books? Rajesh, I'm trying to ask you, what's the debt in your books? What was it last year and where is it headed?
It should be around 130 crore rupees.
And last year it was?
Last year it should be, to our knowledge, it is more or less very same. Maybe working capital utilization would be lower because of the season.
Okay.
And good cash surplus.
Okay.
So the working capital reduction might be there.
Okay.
Okay. I thought your overall debt as of March was 160 crore. You're saying, and now you're saying it's 130 crore. So has it come down on a quarter-on-quarter basis?
Yes, definitely, because the season, because of the flush season, the cash, we might have a cash surplus and we would not have.
But are you, no, Rajesh, what we're trying to understand is, are you repaying some debt? Are you borrowing at a lower cost? That could be another reason.
Yeah, that's also is we are borrowing at a lower cost. We are repaying some of the debts also.
Okay.
So, but simultaneously, some expansion is going on. So overall, yeah.
You had guided for an 8 to 10% domestic revenue growth at the end of last year. Are you maintaining that guidance? And what's your outlook on the international business? What's the kind of revenue growth it can clock in?
The 10 to 15% growth should continue in the domestic market. That is one thing. Last year was a GST effect was there, where we had to bring down the prices to adjust the GST things.
Okay.
So now that period is over from 1st July. So we should be clocking 10-11% plus growth. Okay. And internationally, we are looking at around 25% plus growth in overall sense, which includes a variety of products of the exports.
Well, how much of your revenue is, from exports or dollar denominated? Small part?
You see, from this company, it is around 10%.
Okay.
If you look at consolidated, it might be around 15%.
From the listed entity, you're saying that it's 15%.
Yes, that's true. Yes.
So the rupee going to around 70 from around 67 on an average, that gives you some kind of benefit of around...
Definitely. That will give some benefit, yes, absolutely.
Okay, all right. Pleasure talking to you. Thanks so much, Rajesh, for joining in and giving us all those details. Keep it cool for the remainder of this year then. By the way, the Nifty is just soaring ahead. Actually, we were spotting smaller stocks, like Coal India, Tata Steel, but I'm looking at Reliance Industries. And I think that big one has moved, and that's the reason why the Nifty has moved to the high point of the day. Yes, there are moves on Tata Steel, on Coal India, but Reliance Industries, that stock has spiked up and it's taken the Nifty with it. And now we have moved to around 11,430 odd. And it's not just Reliance Industries, actually. A couple of other stocks as well are participating. Bajaj Finserv is moving higher. Sun Pharma, well, on a year-on-year basis, the numbers look good. Let's see what's the commentary from the management as well. But some of these stocks, they're moving higher as we speak.
Even, Asia was actually a mixed picture. So you had the Japanese markets, which were doing very well. The two markets which were in the red were the Chinese markets as well as the Hong Kong market. And both the markets have seen a recovery from the low point. So for instance, the Hang Seng has recovered nearly 170 points from the low point of the day. So now it's down less than a percentage point, while Shanghai has seen a recovery of nearly 0.5% from the lows. So there is a bit of a recovery, as you can see, coming through in Hang Seng as well as in the Chinese market.
Rima, if you look at some of those broader market stocks as well, I remember Repco Home Finance, that stock was down more than 3.5% in early morning trade. So some of those mid-cap stocks as well have recovered a goodish bit. I think we should get the intraday chart. That'll tell you a better picture. And even Apollo Hospital, yesterday the stock had a big run. Today the stock opened up in the red, but intraday chart should come up for you. You put both those 2 days together, the stock is up nearly around 17.5%. So keep your eye out on that one as well. But I remember at around 10:30 a.m., we asked Ashwini Gujral, the rupee, well, it's weakening, it's crossed at 70 odd mark. He said the markets are going to get used to this. Buying the Nifty Bank should be the strategy. Ashwini, that's worked out now. For all those who are long on the index, where do they place their stop loss at? And is there a fresh trade now?
See, that could be less of an issue. The issue is for people who are still short. My advice is cover, otherwise you will get your head handed to you by the end of the day, because the way it's recovering, as we go higher, the short covering will become even stronger. Most European markets are going to open higher. The rupee action did not take the market, collapse the market. In the fact, even the bank Nifty is at the highs of the day. That means the market has priced that news in. So basically, bank Nifty, you can say now your stop should be 27,950, and on the Nifty it could be 11,400. But you shouldn't be surprised if the market closes at the highs of the closer to the high point of the day. So the best of the rally could still be ahead. Having said that, Bajaj Finance is a buy with a stop of 2,800, target of 2,865. DHFL is a buy with a stop of 640, target of 675. And VIP Industries is a buy with a stop of 580, target of 605.
Clearly not bothered by the rupee depreciation. Ashwini, any thoughts on Reliance Industries back above the 1,200 mark?
See, Reliance was an outperformer even going into this correction. But now, just 3 down days, again, moving back up. I wouldn't be surprised if you get a new high on Reliance in the next 3 or 4 sessions. My sense is the correction is done. So, that should be a fairly strong and solid message that the market probably has made a low of this correction, given the size of the move that you are seeing right now.
Okay, all right. Just hold on to that thought, Ashwini. I think we're getting some numbers from GVK. I don't think we've got those numbers as yet. So I think the standalone numbers should be up for you on the screen. Top line, well, that's more or less flattish. I think 23 crores, that compares with around 22 crores. But the stock is jumping up. I don't know whether there's an exceptional item. No, I think it's an operational beat actually, because the net profit should come up for you. That's coming at around 16 crores. That compares with around 6 crores. So I think that's the reason why, in fact, suddenly the stock has spiked up. We'll wait by, let our ticker team really update us in terms of those numbers. But it appears that these numbers have just got uploaded on the BSE. And that explains why the stock has spiked up. Top line, a marginal growth, but I think the net profit number has come in at around 16 crores. And that's why I think the street pretty much likes the set of numbers. And not just that, there's some finance costs reduction as well on a year-on-year basis. Remember, these are only standalone numbers that we have as of now. But I think that could be one of the reasons why the stock has moved up. Raj,
finance cost is lower. The other income has gone up by nearly 5.5 crore compared to the prior year. So all these factors have contributed to the growth in the bottom line.
Okay, all right. Let's get in Rajat's picks then. Rajat, what are the picks that you have for us?
Well, I have two picks, and I continue to think that Nifty is actually going to go up, and towards the end of the day, maybe 11,465 to about 11,470. That could be seen if momentum gets going. Having said that, I have chosen Tata LXI. It's a good momentum player. I would put a stop loss below 1425, and 1454 and 1464 would be the two targets. And Biocon, which I personally hold in my investment portfolio, Biocon 574 is the stop loss. 587, 591 are the two targets for Biocon.
Okay, thank you, gentlemen, for joining in. Let's get the early rates up for you from the European markets. Let's see whether there is a recovery after the recent sell-off that we've seen in the global markets post on the back of the lira-driven. Well, yes, in the green, the CAC is higher by 0.5%, the FTSE up 0.25%, while the DAX too has seen a recovery, so bouncing back with a gain of about 0.7%. So in the green right now for the European market. So this should turn out to be a fairly steady session for the global equity markets. Get into a break. On the other side, LT Foods has posted an operationally weak quarter. This time, we get chatting with Ashwini Kumar Arora, the MD and CEO.
It's at the high point of the day. We have to keep mentioning this because every time we come back, the markets are just moving higher as we speak. Reliance Industries, that's the one that's taken off. It's up more than 2% now, and majority of that move has come from the time we started off the show. So just take a look at that intraday chart, single-handedly taking the Nifty higher. But let's focus on the next company. We have LT Foods. That's a stock in focus. After posting an operationally weak quarter, their gross margins declined by around 500 basis points on a year-on-year basis, while their branded food segment, that's however delivered a pretty strong growth. We have with us Mr. Ashwini Kumar Arora, the MD of the company, who joins in. Sir, before we just come to you, there are some details that are flashing for us on the screen. GVK Power auditors, they say that in fact they're unable to comment on the recovery of around 1,130 crores. That's the investment in various subsidiaries, and that's why after, in fact, we did see the stock move up because the net profit number optically looked good, but the stock now has come lower. So just keep an eye out on GVK. While Allahabad Bank, what do you say about this bank? Well, it's delivered a net loss yet again, but we'll have to keep an eye out on the fine print. What exactly is the asset quality number? Well, that's been maintained actually on a sequential basis. That's been maintained at around 15.97% odd. The net loss number, though, that's rather large at around 1,900 crores odd. So we're waiting by for further details in terms of,
The NPA as a percentage has come down to 7.32 versus 8.04. So while the gross NPAs have been maintained, but it's still a very high figure of nearly 16%, the net NPA has come down from 8% to 7.3%. Let's just give you a sense of what the provisions are, because the company has reported a big loss of 1,944 crore. I think the total provisions have come in at 2,762 crore. Which is a sharp jump compared to the prior year. Compared to the prior year, it's doubled, but it's lower on a quarter-on-quarter basis. So the reason why the company is reporting a big loss this quarter versus a profit a year ago is a sharp increase, the doubling of provisions, which stands at 2,762 crore, and a very large percentage, more than 90% of the provisions are on account of provisions for the non-performing assets. That is the key reason for that. Have you got the NII?
Yeah, no, I'm just looking at another detail, Rima. Actually, if I look at the other income, that's coming at around 195 crores. On a sequential basis, that's comparing with around 482 crores. So that's a sharp decline even in terms of the other income. And on a year-on-year basis, 194 crores, that compares with around 821 crores also. Just keep an eye out on that factor as well. I think we have the NII growth. Well, it's quite a decent number. I think I saw a growth up there. So let's get that number actually up for you on the screen. It's at around 1,700 crores. That compares with around 1,243 crores. So those are the details in terms of Allahabad Bank's numbers. There is some improvement in the net NPAs, but still a rather high number at around 7.3%. To the gross NPAs, they are more or less stable. The reason that we're seeing a net loss, as Rima pointed out, the provisions have gone up, and in fact the other income is sharply lower, both on a sequential basis as well as on a year-on-year basis. We should pull that number as well up for you. 194 crores compares with around 480 crores on a sequential basis. But let's get back to let's start our conversation with Mr. Arora, the MD and CEO of LTE Foods. Apologies, sir. We just final day of earnings season, a lot of numbers coming in there. But tell us about your numbers. We have a revenue growth of around 12%.
Yeah. So, in the first quarter, we have grown by 12%.
That's true, sir. That was my first question, sir, actually. And break that up for us, volumes and pricing.
Yeah, so our PAT has also improved by 13%. So our
Mr. Arora,
yes.
Sir, we have got those numbers with us. We were first focusing on your top line. As you told us, there's a growth of around 12%, right? So
yes.
Break that up for us. How much of it came in from volume growth and how much of that came in from higher realizations?
Okay, so the volume growth is around 8.5%.
Okay.
And the value growth is 17.6%. Hello?
No. No, sir, that number is not fitting in. The volume growth is around 8.5%, you're telling us. The total,
yes.
The total sales, that's in revenue and rupees crore, that's up by 12%. So
no, I was talking about the branded sales.
Okay.
So the branded sale, the volume has grown by 8.5% and value growth is 17.6% because, LT Food is in organic business,
organic foods and branded as well.
Private label,
Yeah.
So I was just trying to tell you, the branded part of the thing.
Okay.
Yeah.
Okay, since you are talking about the branded business, it currently contributes 69% of your overall business.
That's right.
Okay. By the end of FY19, how much do you think it's likely to contribute, and any targets that you've set?
The branded business will be around 68 to 70% of our total business.
Okay.
And organic will be around 10% of our total business, and rest is the private label business.
Okay, all right. What about raw material cost? Have they been spiking up? And your margins are now down to around 11.1%. If raw material costs are going to go up,
no, if you see, our EBITDA margin has improved against the full year last. It is around last year the full year was 11.3%, and now the EBITDA margin have improved to 12.5%.
Okay, so yes. Mr. Arora, depends on how you're calculating that, but what's your sense? With raw material costs going up, the margin that you are talking about or what you have delivered in the first quarter of this year, can you maintain those margins? Is it possible?
Yeah, that's the plan, that's what we are looking for. Yes.
Okay, but raw material costs are going up, right? How do you maintain it then?
So, so as far as, our business is concerned, we already have sourced the raw material for this year for our branded business. So it is not going to impact our margins.
Okay. But, going ahead, the kind of gross margins you will enjoy, give us a sense of what the raw material situation currently stands at, your inventory. So, what would the gross margins look like for the company?
So we will improve little bit on the gross margin, which is 26.7% at the moment, and in the coming quarters it will be improving, on the gross margin side.
Mr. Arora, split it up for us. How much of your revenues comes in from the export market? How much of it is domestic? And the rupee is depreciated, so that should be good news for you, isn't it?
Yes. So our the India business is around 40%. The 60% comes from exports, and definitely. But we have a hedging policy where we do hedge our business, and definitely in the long run it is going to improve this depreciating of rupee.
Have you seen any impact of the Iran sanctions on your business?
As far as LT Food is concerned, we don't have any exposure in Iran market.
Okay.
Yes.
Okay. All right.
Yeah.
Okay, Mr. Arora, thanks so much for joining in and filling us in with all those details. All the best for the remainder of this year. Well, we'll slip into a short break. Up next, we'll get you an exclusive conversation that my colleague Anshu Sharma had with the management of Jindal Stainless. Stay with us.
Welcome back. Allahabad Bank stock falls nearly 3.5% as the bank reports a big loss of nearly 2,000 crore rupees on the back of higher provisioning. Abhishek joins in with the details. Abhishek?
Well, Rima, to begin with, actually there's a huge balance sheet decline. So you look at the loan growth on the calculated basis, it shows that the advances have declined by 6.5% YOY and quarter on quarter. So to give an absolute value, they have reported a net loss of cumulative net loss of about 8,000 crores in last 11 quarters. So what has this affected? This has affected their capitalization. You look at the CET1, that is Common Equity 1, and the additional Tier 1 ratio. Their overall Tier 1 ratio is below 5%, and this is perhaps the lowest amongst PSU banks in terms of Tier 1 ratio being below 5%. So gross NPA and net NPA in absolute value declined by 5.6% and 15% because they made additional provision, and they also had a slightly better recovery, which can be seen in the interest income part, because that has jumped substantially higher, 22% quarter on quarter, given the fact that loan growth has been very tepid and balance sheet has declined. So net loss of 8,000 crore in last 11 quarters, leading to the Tier 1 ratio falling below 5% is very negative for the bank.
Okay, all right, Abhishek, thanks so much for that. Well, markets holding more or less steady as we speak. They're up close to around 80 points odd. Broader markets, well, a relative underperformance, but in fact, that is well holding with some grain. Let's shift focus to CNBC TV in exclusive now. My colleague Anshu Sharma caught up with Mr. Jindal, the MD of Jindal Stainless, began by asking him about the company's corporate debt restructuring and also asked him about what's the impact in terms of imports coming into India. Here's a snippet of that conversation.
Right now, we have met all the conditions for CDR exit. We have applied through the CDR cell, and we're expecting by December we should be out of CDR. Hopefully by December, Jan, with the support of all the banks, SBI has given us our blessings, and by end of December, Jan, we should be out of CDR.
So what is the debt level right now?
The debt level total consolidated debt is about 7,800 crores. Okay. The plan and the strategy for the company is to completely deleverage ourselves right now.
Coming to imports, suddenly there's a surge of imports, especially from Indonesia. How is it impacting, and what are the ways ahead in terms of curbing those imports?
So definitely now with the imports that have surged in Indonesia, we have, working with the government, started some anti-dumping investigation, some countervailing investigation. Imports are continuous. It is, if you see a reduction from China, then in countries like Korea, Japan, Indonesia, we see an increase. So imports, are we seeing a constant surge from about 30 to 35% every month that are coming.
Are you planning to reach out to DG Safeguard or anti-dumping?
We are working with them and they are supporting us, and I think investigation has now started.
So what duty will you be seeking?
We would be seeking more anti-dumping duty from them, because we feel that they're not, there's no level playing field between the countries, and they're sending substandard material also, so we are going to look for anti-dumping duty.
Well, the Turkey crisis has spooked stocks like Redington. The stock is down in trade as Turkey contributes roughly around 7% of the revenue and around 6% of the EBITDA for business. Rima, run us through those details and explain this to us. The stock is down 4.5% actually.
Yes, because the company does business in Turkey and the economic crisis there, the lira depreciation is all impacting them. So this is what Turkey means to Redington, about 7% of revenues, 6% of EBITDA and 1% of the profitability. Redington, per se is a business model. It's a distributor of phones and IT hardware. Because it has a distribution model, what happens to the current stock that they're sitting on? If people are not buying, will they look at an inventory write down? And generally, because this Turkey crisis is not restricted to today or for the last few weeks, it's ongoing. Do they have plans to reduce their exposure to Turkey, perhaps even divest operations? So these are a few of the questions. The overseas business contributes about 65% to their overall revenues. And what the company said last quarter in Q1 in their conference call is that the overseas profit growth with Turkey was about 4%. And if you had excluded Turkey, it would have been close to about 10%. And the problem is because of the serious depreciation of lira, the effective tax rate for the company goes well beyond several 100% versus the actual income tax rate of 20%. It's on the back of that the company's profits, overseas profits, are going to get impacted. So clearly, this is, it has been a problem for the company in the prior quarters. It could be even this quarter. The company is going to be hosting an investor call at 5 p.m. today. So we'll get more color on that.
Okay, all right, Rima, thanks so much for that. Well, we'll slip into a short break. You come back, we'll shift focus to the commodity segment. Stay with us. Okay, let's shift focus then away from the equity markets. Let's talk about metals and precious metals. Manisha, what's going on with gold? Is it a good time to surprise my wife?
It is. It always is. Yeah.
Tell us what's going on. I mean, everyone's talking about risk.
It's even more affordable, with 18-month lows in the international markets. I think it's a good time to buy it. Not for Indians as much, because even as it's falling in the international markets with the rupee depreciation, the Indian calculations, of course, have been on the higher side. But the good point really is that India in the month of July has imported 75 tons of gold. This is the first time that you have seen a positive number after 7 months of constant decline in Indian gold imports. But when you look at the all of 2018, India has imported just about 406 tons, which is 28% less than year-on-year basis. But it always the second half of year when you see higher imports coming in. That would really begin from the next week itself when you have Raksha Bandhan and Ganesh Chaturthi and Dhanteras, Diwali. All of those festivals start coming in is when people actually go out and start buying precious metals. Also because this is yet still sowing season, the harvest would start happening in September, October. That is when the rural India also will have cash in hand and they go out and buy precious metals. So that would be a time that you will see the physical buying come in. The international markets in the meanwhile, of course, have been much under pressure. We did see prices decline all the way to $11.91 per ounce. We've seen some buying come in off those kind of levels, $11.94 holding. It really is about the short, net short squeeze that the markets are anticipating right now, because the net shorts are at record highs. This is the highest that you saw come in 2006, and this is now 2018 is when it's happening. So markets do anticipate that you might see some buying coming in at these lower levels right now.
All right. Thank you, Manisha, for that. With that, it's a wrap on Halftime Report. We leave the Nifty and the Sensex higher up in trade. So it's a 250-point gain on the Sensex, the Nifty higher by 75 points. Stay with us. Business Lunch will take the market action forward.